Robschild, nothing I say is investment advice. Welcome to the show where we look at financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do. And so we begin. Today is January 19th, Friday, 2024. First, I want to apologize for talking so much about PCE data coming out today. Apparently, it's next Friday, so I didn't really need a crystal ball for that. I could have, I don't know. I guess I looked at the calendar wrong. Sorry about that, everybody. Obviously, everything involving talking about PCE data was a complete mirage. So on to the major things going on in markets today. The biggest headline, obviously, that you'll see all over the news, even in mainstream media, I'm sure, regular news, even non-financial news, will be announcing how the S&P broke to new highs today. We are currently sitting on all-time highs in the S&P 500 by a pretty good margin, too. Just one... I'm going to start sharing charts on this. So let's take a look here. I want to share really quick the S&P 500. This is the daily. As you can see right here where my mouse is, that is a huge green candle. Right after a little green candle, a bigger green candle, and even a larger one today. That's an extremely bullish looking pattern. It's called three white soldiers. Technical pattern, although the first one, it's not exactly a soldier, but it looks super bullish there on the daily. And so some traders will be waiting to go back down to test the high to see if you can bounce off of it and then continue higher, and that'll be even more bullish for markets. But it's a little more nuanced than that when we start looking throughout the different markets. In particular, I want to bring up HYT. This is a high-yield corporate bond fund. If the markets are indeed looking to make new highs and stay there and continue, if the markets are really convinced that everything's good and everything's okay, we wouldn't be seeing this. This is a big red candle on high yield corporate, and at the same time you have TLT on the same day with a green candle moving up. This is what a run to safety looks like. It means that the bond market, the smart money, is scared. They're not as convinced by anything right now. What really led the way of the S&P 500 and had been leading the way is the semiconductors. They've been very strong. And if we take a look at that chart, one particular company that's been pretty notable, Supermicro Computer, SMCI, had a humongous jump today, and this probably really broke it higher. AMD, all of these, Nvidia, they're all very strong and they're all leading the market higher. And as I've been saying in my previous episodes, Graham sees what's going on here. It's not that hard to see what's going on here. We have expansion of the need for semiconductors, obviously, with the new technology in cars, everybody wanting to use AI for everything. There's a big need for semiconductors and not quite enough supply yet, apparently. Or if we've gotten there, it's just not clear that we've gotten there yet. It seems to still be an expanding market. However, the more people produce more of these semiconductors, the more risk is involved in this market, which is why I currently actually opened a position today on rolling. I'm starting some rolling calls weekly on SOXS, which shorts the semiconductor industry, because um, I think it's just so overdone. It's kind of getting silly at this point, and if I can, I'm nibbling at it, very very tiny positions, but definitely nibbling on it. It looks a little too tasty to me to completely ignore. Another pretty bullish thing that came out today is the U.S. Michigan Consumer Sentiment Survey. This has been a pretty good indicator, a pretty good predictor towards what's going on in the economy. And as you can see right here, the previous was almost 70. It was forecasted to be basically 70, and it was actually 78.8, quite a bit higher. So you see a little jump here. But when we zoom out on the chart, going back to 1982, you can see we're still pretty low here. We're nowhere near 2018-19 levels. We're still very very low. That said, this has been going up since July 2022. Again, from this point in 2020, beginning of 2020, it looks a little bit more like a dead cat bounce than anything. You see a lower low, lower high, even in this chart, and so when we take a look deep into the crystal ball, we can see that although that data point looks peachy today, it's more likely that the peachiness is going to fade, and we'll see that turnover, I believe, sooner than later when I look into my crystal ball, but we'll see on that. I wanted to mention again with a 30-year Treasury bond. Yesterday I mentioned that we basically hit 4.4. It was 4.39, and today we hit 4.403. So, again, that was my target, and we hit it. My crystal ball nailed it. And then also, if you look at that chart and the TNX, they look the same. Let me pull that up really quick. The TNX right here, this one peaked out around 4.220, but we have a topping tail here, which means which indicates that we're looking at when you look into our crystal ball, that kind of shows that there's a bit of a likelihood of it reversing from here, and so that we may have had a little peak in longer term yields right now, but it's not very clear in my crystal ball in that market. The last market I wanted to mention and share is the EWZ. This goes back to 2003 right here, where we had a run up to 2008, and then we've been making a gigantic wedge pattern for a very long time. This is in a Brazilian ETF, the S&P 500 basically of Brazil. And so as you can see, this pattern 1, 2, 3, 4, 5 times, 6 times we hit this trend line and couldn't break through it. Very recently we broke through it, and we literally retested it today. And so I'm already long in this market in Brazilian equities, but I have never seen a more beautiful setup in my crystal ball as far as chart patterns go. I mean, chart patterns are not, they're not a science, they're not 100% dependable, but they do often play out fairly predictably. I mean, there's probabilities involved, and something like this is it's a very beautiful chart. The Brazilian ETF, and the risk here, I just love this chart. I'm going to show it one more time. The risk here, the downside, if you can just assume that there's going to be buyers waiting at these lower prices psychologically, the downside potential for this is as much as maybe 30% if we went from $30 down to $20 basically. But the upside, if we were to ever get to the peak of 2008, or even, one of these other smaller peaks from 2019, $50, you're looking at almost doubling your position size without that much difficulty. Again, my crystal ball gives no investment advice. This is all entertainment. And that's all I have for you for today in financial markets through crystal ball gazing. I hope you enjoyed the show. Thank you for watching, and I hope to see you next time. Robschild.